Good day. We're here today at the Payant Financial Plaza in Sun City, Central Florida, and in the next few minutes, we're going to find out what makes this firm different from others. First, it is my pleasure to introduce Thomas Payant, Chairman and CEO of Payant Financial Services. Tom, how are you today?
Terrific. I'm great. Thank you, Robin.
First, can you give us a little bit of a background on you and your firm?
Yes, I'd be delighted to. For more than 30 years, Payant Financial Services has served as a trusted partner of individuals and families, providing wealth management guidance and solutions based on a thorough understanding of each client's situation and goals. We take an objective and proactive approach, bringing proven expertise to bear on every aspect of a client's wealth, from accumulation and growth through preservation and distribution. Our team of professionals includes a certified financial planner, or CFP, and a chartered financial analyst, CFA, and these individuals are highly skilled and knowledgeable professionals that have gone through extremely rigorous training. Each designation requires years of training followed by comprehensive exams that demonstrate their ability to convey what they have learned. The designations also require the requisite work experience. Both of these designations require that they adhere to a very strict code of ethics, professional responsibility, and rules of conduct.
Very interesting. Can you elaborate a bit on your philosophy and approach?
Well, Payant Financial Services is a registered investment advisor. While each of our clients is unique, they all have one thing in common. They want unbiased investment advice from experienced professionals. When crafting an integrated wealth management plan, we offer expertise in the 5 areas of financial planning. Those areas include investment planning, retirement income planning, tax planning, insurance planning, estate planning, which includes business succession, intergenerational wealth transfer, and philanthropy.
Tom, how do you work with clients?
Our clients benefit from a collaborative relationship that addresses and anticipates their needs. We follow a disciplined wealth management process that provides a structured approach while allowing for customization as the client's situation demands. We understand your goals. Together we define your needs, your goals, and your risk profile. Secondly, we create a plan. We determine the appropriate allocation of assets to realize your particular objectives. Third, we craft your portfolio. We identify the specific investments that align and support your strategy. Fourth, we stay on course. We assess performance on a regular basis, making changes and refreshments to your portfolio and strategy as needed.
That's wonderful. What do you feel makes you different?
Every client benefits from the collective experience of our professionals, which spans more than 90 years. Our team-based approach provides access to the specialized expertise of each one of our professionals. We pride ourselves on providing an objective point of view without the distraction of conflicts of interest. Our goals and those of our clients are one and the same. Our clients experience only one kind of relationship, the kind based on deep understanding and mutual respect. Such relationships are, in our experience, fundamental to the success of every wealth management plan.
Interesting. Can you describe your investment management process?
Well, our approach to managing client assets is rooted in the following core strengths. The first is a deep understanding. Before we invest any money, we determine a client's goals. We also determine their tolerance for risk, and we determine their time horizon. We measure these factors against our extensive knowledge of investments. Only then do we consider asset allocation and diversification. The second thing is we have a disciplined portfolio of investments. We also seek to provide diversification within each asset class across sectors and industries. The third is rigorous oversight. When implementing a client's investment strategies, we use a stringent process to screen investments, selecting those that meet the objectives established for the client. Once the appropriate investments have been chosen, we provide ongoing oversight and make changes as necessary.
Are retirees different?
Robin, I'm glad you asked that question. Yes, they have a different time horizon than investors that are not retired. Allow me to illustrate through the story of Sam and Stero. That's not their real name. Sam worked for the same nationally known firm for 40 years. In 2007, he retired as an executive. Prior to retirement, he signed an agreement with a well-known national brokerage firm that happened to be the custodian of the firm's 401k plan. After meeting with the firm's financial advisor representative, Sam signed the paperwork to roll over his 401k to an IRA at this firm. The rollover took place in the fall of 2007, and the value of the account was about $2.5 million. Sam instructed the financial advisor to distribute the $100,000 annually of income, which is roughly 4% of the value of his account. Because of the financial crisis of 2007 through 2009 and the $100,000 annual distribution, the current value of the account is about $1.3 million. So what was at one time a 4% distribution rate has now become almost an 8% distribution rate. Given this scenario, they may very well run out of money while still living. That certainly could not have been the plan when Sam and Sarah retired.
My, how frequently do market declines occur?
Well, I'm glad you asked, Robin. Since the end of World War II, there have been 27 market corrections of 10% or greater, and 12 of them turned into bear markets with losses of 20% or more. Several of these resulted in losses greater than 50%. We can rightly define these moves as crashes. For an investor in their 30s or 40s, this may be devastating, but they still have a number of working years to try to make up for the loss. An investor who is retired does not have this luxury. This could result in the destruction of their retirement lifestyle. In order to recover from a 50% loss, you would need a gain of 100%. It is very challenging for a retiree who is taking income in a declining market to fully recover.
Are there specific investment strategies in place that are designed to help preserve portfolios against significant market loss?
Some firms and financial advisors may operate under what is known as a buy and hold or passive strategy, regardless of market fluctuations. Their clients may be surprised when they learn that no action has been taken to change strategy during a prolonged market decline. There may be thousands of investors of different ages and circumstances who are in this particular strategy. However, there are advisory firms in which the management is done in-house by the financial advisor and the team. For example, at Payant Financial Services, the financial advisor and the professionals on staff operate as an investment and wealth management team. Management of the assets is done by the team on a discretionary basis. Discretion means that it is not required to contact each client before a buy or sell is placed. This enables the financial advisor and the team to act very quickly if the need arose. This is a strategy that may help avoid what happened to Sam and Sarah. This is the approach that, in our opinion, may work well for many clients. At Payant Financial Services, we are the portfolio managers. We know the client. We not only choose the investments based on the risk tolerance of the client, but we monitor their investments on a daily basis.
How about the nuts and bolts side of your firm, Tom? You know, trade clearing, custody and reporting, preservation of client assets, as well as access to their account reports.
Well, Robin, this is one of the things that we are absolutely the proudest of. Payant Financial Services uses Pershing as a custodian and clearing agent. Pershing is a Bank of New York Mellon company that has been a leading global provider of financial business solutions for almost 75 years and serves many of the world's most respected financial organizations. Pershing has over $1 trillion in global client assets. Bank of New York Mellon has $26.2 trillion in assets under custody and/or administration. Pershing's core financial strength provides the foremost measure of protection for our clients' assets. Having Pershing as our partner gives us access to a great array of investment choices and services. The size and strength of Pershing often enables access to institutional pricing. Institutional pricing may provide lower purchase and sale and management costs when compared to normal retail pricing available to the public. Our clients can access their Pershing accounts 24/7 with a detailed reporting system that keeps their information up to date. They can monitor their portfolio assets and performance. Our great financial reporting system keeps our clients abreast of their average annual percentage returns, including dividends, interest, and realized and unrealized capital gains. They also are able to generate projected cash flow on a month-to-month basis, as well as a myriad of financial reports.
Does your annual asset management fee include comprehensive financial planning?
That's a great question, Robin, because many firms do this, what we call a la carte. We, on the other hand, charge a fixed annual percentage based upon the size of the assets under management. Service in all of the 5 areas of financial planning is included in our annual management fee. At payant Financial Services, we make it a priority to ensure that there are enough team members with the requisite skill needed to provide the highest level of service required to provide a proper, comprehensive approach.
Is there a specific area of financial planning that may be overlooked at times?
Well, great question, Robin. To our surprise, we found that the 5th area, estate planning, is sometimes overlooked, and that particular area is very important to all of our clients. We have found that there are a variety of estate planning techniques. Some of these may offer significant opportunities for tax relief before death. There are trusts that may minimize or possibly eliminate estate tax. We understand that these strategies can work towards creating the most advantageous estate plan for a client's unique circumstances. You know, Robin, one's death is a very difficult time for the family. There's a great deal of necessary administrative paperwork needed to retitle all of the investments to the designated beneficiaries. It'll be necessary to contact all of the beneficiaries, open new accounts, and ensure that the investments go to the proper beneficiary. In most cases, this duty falls to the executor or trustee to complete this time-consuming process. Often the trustee/executor is a family member with little or no experience in settling an estate. This is a very complicated process. We are proud of the fact that we can provide the above services for families without any additional charge or fee, thus simplifying the duties of their executor trustee.
Can you briefly comment on how clients benefit from your firm's wealth management services?
Well, Robin, we're an independent wealth management firm with no proprietary investment products to push. We believe this helps eliminate a potential area of conflict. We have found that our clients appreciate our objectivity and also appreciate that our compensation is tied to their performance. We focus on their financial objectives and their future. Our success is tied to our clients' success. Our interest in our clients' success doesn't stop there. We carefully monitor their progress and compare it to their goals. We make periodic adjustments to rebalance their portfolio, ensuring that our strategy stays on track with their needs. We pride ourselves on providing an objective point of view without the distraction of conflicts of interest. Our goals and those of our clients are one and the same. We've had the privilege of working with individuals and families for over 30 years, often over several generations.
Now here's the question, Tom. If someone wished to consider becoming a client, what should they do?
It all begins with a conversation. To learn how you can benefit from wealth management based on integrity and experience, I would invite you to please contact us at 813-633-7333. Or, if you prefer, email us at tpayant@payantfinancial.com to arrange a complimentary, no-obligation assessment of your financial situation.
Thank you, Tom.
Thanks, Robin. Really appreciate your help.
Okay.